For The Street in New York, I'm Jill Malandrino with the weekly recap and your trading week ahead. Let's quickly take a look at the 5-day chart and the S&P 500. As you can see, it was a pretty volatile week for stocks. In fact, the S&P is now trading back below its 100-day moving average, which is a key indicator technicians focus on when looking at longer-term trends and patterns. In the past year, when the S&P has touched or fell slightly below the 100-day, traders viewed that as an oversold condition and stocks recovered. The question is, does the market have the underlying strength this time around, which brings us to your trading week ahead. With light economic and earnings calendars, all eyes will be on the FOMC rate decision and Fed President Janet Yellen's press conference following the 2 p.m. announcement on Wednesday. This is the most momentous monetary policy decision since the financial crisis when to raise interest rates. Traders see this as a very binary event focused around the word patient and what exactly it means regarding the timing of interest rate hikes. Billions of dollars in profits and losses will be riding on this outcome. For example, we can't be patient any longer, or we will remain patient for at least another year. Will create a very different reaction with very different scenarios. In addition to the Fed, housing starts and building permits will give some insight into the strength of the housing market. Only 2% of the S&P reports, and key names include DSW, Adobe, Bankrate, Ocwen Financial, Oracle, FedEx, General Mills, Williams-Sonoma, Darden, KB Home, and Tiffany. Crude continues to struggle to find support, and traders do not see the situation improving much in the near term. In fact, there is chatter in the marketplace it could trade with a $20 handle. The fundamental oversupply situation does not see any resolution in sight, and storage is now a real concern. A strengthening U.S. dollar and economic weakness in Europe and China are also contributing factors. Speaking of a strong U.S. dollar, gold had a really rough week, hitting a 4-month low midweek as the dollar index hit an 11.5-year high. Also, reports are out this week indicating demand for physical gold in the major importing countries of India, China, and Turkey was less than expected in January. So the key themes for trading for the week ahead will be focused on jockeying around the Fed and commodity and currency markets. I think it's safe to say March is living up to its reputation of being a volatile month. For The Street in New York, I'm Jill Malandrino.